Disclaimers. 1. The content shared in this podcast is strictly for informational purposes and should not be construed as financial or legal advice. 2. The opinions expressed by the hosts and guests are solely their own and do not represent the views of their employers or affiliated organizations. 3. None of the projects or companies discussed should be considered as endorsements or recommendations. 4. While efforts are made to ensure accuracy, the information provided may not always be up to date or entirely reliable. It is advisable to conduct independent research and seek professional guidance before making any financial or legal decisions. 5. The hosts and guests of this podcast shall not be held liable for any consequences or actions resulting from the use of the information provided. 6. All content, including text, graphics, and audio, is protected by copyright laws. Unauthorized reproduction or distribution is strictly prohibited. 7. Any discussions on sensitive topics aim to foster inclusivity and respectful dialogue, but differing opinions should be expected and not attributed to the podcast creators or sponsors. 8. By listening to this podcast, you acknowledge and agree to these disclaimers, and you are responsible for your own interpretation and application of the information presented.
Hey everyone, welcome to the next episode of the Intersection4 podcast. I'm very excited. The topics today are something that I've been really thinking quite deeply about, and they're not just topics that affect a few people. They're the topics that affect entire countries, politics around the world, and even something to the depth of what it means to be human in today's world. And so very excited to have Brendan with me to discuss these things. As a reminder, Brendan is the founder of Athena Intelligence, and he's the resident founder, AI, machine learning expert. I'm the founder of Plutus 21 Capital. We are a frontier markets and frontier technology investor. So let's jump right in. The first topic for the day is how identity and security has changed in a world where sophisticated and very powerful AI is available. And I want to give you some background on how I even started thinking about this topic and why it might be relevant to everyday people in their everyday lives. I was on the same day, it was a coincidence. I was spending time playing around with some AI tools that could take my voice and change it and add things to it and take a few seconds of my voice and replicate it quite effectively. And it was a coincidence that on that same day, I was also on a call with a bank confirming wiring instructions. And that really got me thinking about how authentication, which usually takes the form of checking identity by having a video call with somebody or checking identity by having a phone call with somebody, like how all of that changes in a world where reports are that the AI only needs about a 3 to 5 second clip of your voice to be able to replicate it to pretty impressive quality. And if you think about obviously people like us that are on podcasts, but even just regular people, it'll be quite easy to find 3 to 5 seconds of their audio or their video somewhere online. And the more that all of us become, put our information, put our voices, put our videos online, the more this becomes a problem. So as the resident AI founder on the podcast, I'd love to kind of hear your thoughts, Brendan, on what you think about the topic. Am I overly concerned about this? Is the concern well placed? And where do you think the capabilities are today for this to really be a problem?
Yeah, it's funny, as you mentioned, you've just kind of gone through this process of wiring money. We're fundraising right now at Athena, and we've had to go through this over the last few days as people will start wiring us money. And some individuals will just immediately wire it. Others, we have to do a double verification phone call. And we actually just did this exact same scenario. So I forgot about that until you said it.
Yeah.
I think it's well placed, but I think it's a bit early. I think right now, I was surprised to see recently the FCC had a massive crackdown on some SMS provider that was sending spam. And a number of different regulations require Verizon, AT&T, and other mobile providers to effectively let the traffic go through, regardless if they know it's spam or not, because that's effectively going to be at risk for censorship. So for the first time in a long time, they're actually allowing them to block this particular provider, which was a massive crackdown. That will stop like tens of millions of people from
Wow.
actually seeing a lot of these attack vectors over text. The AI one I think is more interesting and very relevant, but I'd be very surprised if anyone actually had that happen within our network anytime soon. In the long term, obviously, this is going to be a big topic, but probably a drop in the ocean.
So actually, like I was reading up on, the initial research or like surveys on this, and there was a survey of about 7,000 people in 9 or 10 countries, and they actually found that about 10% of those people, so about 900 people, had actually already received an AI based, fraud scheme like this through their phones and what through their voicemails and their phones. And what they also found was from this 10%, so about not 900 people, 700 people. From those 700 people, almost 80% of them actually wired the money and sent the money and lost money in this transaction. So it's not a. I think the percentage of people that fell for it might not be as high, but the percentage of people within that group that actually lost money, I think is probably higher than a usual scam.
I
I think it's
understand.
probably, only maybe 20-30% of people who get a scam call actually fall for it. But when it's somebody that is pretending to be someone that they know and trust, I think the percentage chance that the scam is
Yeah.
actually successful, I think, goes way up. And the losses were not small. The losses were between $500 and $15,000.
Interesting.
So uh, I was also of the opinion that, oh, this is obviously a problem, but nothing that is going to be a problem anytime soon. Um,
But don't you think the
but
statistics on that are like circular? If you don't know it's an
okay,
AI, how can you report that you've been like tricked by an AI or that you've gotten an AI call in the last 30 days?
yeah. So I
Yeah.
guess like maybe the way that they figure it out after the fact is, let's say it's Brendan's voice that was replicated, and I fell for it and wired money. And then when I actually talked to the real Brendan, Brendan was like, well,
Yeah.
I never sent you that message. And I've been thinking about this a lot. I think probably more than I need to.
Yeah.
But I was even thinking about it in the context of voice notes. So it's quite common for me to communicate with people over WhatsApp. And when I'm driving or if I'm busy and I don't want to write a text, I send a lot of voice notes. And I never used to think twice before sending a voice note to a stranger. Like never even dawned on me that, that would be something that I should be concerned about. But after having thought about all of this, now I'm thinking, why am I sending voice notes to a complete stranger? Because that same person with just about 3 to 5 seconds of my voice could be um, really doing these very targeted phishing attacks.
Mhm.
And I think that if somebody targeted my family or my company and my teammates with something that targeted, I think actually would be quite successful. Because the way that they would double check all this stuff is like, oh, well, if Hamis sends a voice note, well, that has to be real.
Yep.
So
Yep.
I think it's probably like closer than people think.
I totally agree. I just think the numbers don't work out right now. Like I'll give you an example. I have one of our employees, Ethan. He messaged me yesterday, and let's see if I can pull it up and say exactly what it said. But he sent it to me as a joke because he knew it was phishing. It said, "I need you to get some gift cards from any store around the block." Oh no! First message was, "Hi Brendan," or "Hi Ethan. Are you free at the moment? I need you to handle something for me, Brendan Giles," and it's a random number. And then I told him, "You should respond. I want to see what these people say." And then the follow up question was, "I need you to get some gift cards from a store around. I'm in the middle of something and need the codes. Can you handle this for me?" The cost to send that text, you don't have to have any interesting tech. It's not hard to make. You don't need a voicemail, and it's probably an automated system. Is like cents. And the
Mhm.
through rate on that is probably a few $100s. So when I look at the 515,000, the amount of like engineering to actually stand up that system, the 515,000 doesn't seem like they're able to meet the same outcomes that you get from this text message service. Because it's a pretty decent service. I could see someone fall for it.
Yeah.
If they're like a targeted campaign, I could see this be like uh, more successful. But I'm still unsure if I trust these the latest numbers, but
The
have to
little
be
numbers.
proven
No,
wrong.
no, that makes sense. You're right. Because if it's like you would have to go whale fishing for this to make sense, right?
Yeah.
But with every, CEO in the world, every CFO in the world, I think the chances that you can find enough video content or voice content for a CEO of really any company, like the chances are like probably close to 100%. Like you can find something about them on the internet where you could extract some valuable information. And then when you go whale fishing, and the target is a couple $100,000 or a couple $1 million even, I think then the numbers can really start to make sense. But I agree with you. I think that these mass market kind of scams, this type of technique, like really doesn't add up or make sense. Uh,
And what's crazy, like in line, is I think last week OpenAI just announced, or they didn't announce, excuse me, it was found out that they're cutting off their AI watermark team. So that was like ideally supposed to be stood up in order to identify, what photos, videos, audio, text generation is based on AI, and they actually are cutting that team. They quietly cut the team. So when we think
why?
long term,
Why do you
the,
think?
the the allegations are they weren't able to
Hmm,
successfully do
sure,
that,
sure.
is maybe a dead end and they don't want to come up with bad results. They'd rather just quietly kill it. And obviously, these are all allegations. So I think that's actually an interesting topic because originally people were hoping that we'd have AI watermarking. So that way, like my phone could pick up, hey, this isn't actually
Hmm.
a person. This is like using some statistical um, relevance that attributes it to an AI. Maybe that won't happen anymore. So maybe it is more
Very
relevant.
interesting. So what would be defenses, right? Like from a technology perspective, because it sounds like an arms race. And we've talked about this arms race before, right? Where if, the bad actors start using the technology, then the good actors have to continuously, keep up with that. Otherwise, they fall behind and it becomes a real threat. And I think it actually falls quite nicely into our next topic, which is this is an arms race, and not the arms race in the typical sense of typical weapons, but arms race in terms of technology. So, from a technology perspective, what do you think are possible solutions? You talked a little bit about watermarking, but are there any defenses against this that you can think of?
I don't know about hard and fast defenses. What interests me though is where we are going to um, provide the fault. It will be on the railroads, and what I mean by that is, historically, Section 208 for social media doesn't allow the social media companies to see fines from bullying. Will that happen for the phone carriers? Will they hold
Hmm.
liability for some of these things? Will the Twilios and SendGrids that are actually like allowing people to have this phone number or make the phone call, will they be better
Hmm.
identity checks at that mark, or is it on the end consumer to actually create these defenses? I assume that there's going to be more human proof points happening at like the stand up points. Wherever you're spending $1, you have to prove that it's a human dollar, not a bot. And we're seeing that in Twitter has to do that as well. And a number of systems are now saying, how do we uh, how do we prove you're a real person? So when
Real
you act
person.
maliciously, we can attribute it to you. I don't know.
Yeah,
Do you,
that's
do you feel
right.
the same way?
Yeah, absolutely. And actually, another interesting coincidence was while I was going through this, revelation that my voice could be used in the wrong way, that same week, WorldCoin was also launching their project, right? And for people who don't know, WorldCoin might sound like another, crypto company that you shouldn't really care about, but it's actually a company that is backed and has a lot of involvement from the CEO of OpenAI. And his major concern from his own work at OpenAI is that it will become increasingly difficult to tell a person apart from a computer. And so the whole premise around WorldCoin is that they have these, orbs or globes, you can call them, all around the world that can actually scan the iris of each individual, confirm that it's a human iris, attach a real identity to that iris on the blockchain, and to incentivize people to put themselves on this blockchain, they're going to give you the world coin, right? So the least interesting part of this whole thing is the world coin, right? Like that's like I can understand why that's interesting, but that's not the core of the thought process here. But it would be very interesting if there was a immutable database of people where you could actually attach something that is so unique to each person as their iris back to a immutable identity online. And if you can start doing that, then the source of truth or the source of information for all interactions related to identity could become that blockchain. And you could really then have companies like Twitter, companies like the financial institutions where this fraud can happen, actually connect the dots and provide a pretty, I think, sophisticated solution to this problem, where if your identity was supposedly used somewhere, you would have to prove it cryptographically through the blockchain. And I think if you can start to kind of merge some of these technologies together, you can actually come up with quite a strong defense because you take the immutability, the global nature of a blockchain to be able to store this information about identity, and then you take the power of IoT devices. That's what I would call that orb, is kind of like an IoT device, and then you put those together to create a database of real humans that actually is very difficult to um, to mess with, to corrupt.
Yeah.
So that's an interesting thought experiment, but also that it's being done in real life,
Yeah.
and
It's
it's
not,
actually live today.
yeah, it's not surprising that the person who is running into this issue of computers and bots taking AI tools and using them in the wild also is supporting something that prevents that. So maybe he killed the privacy project and the AI watermarking project because this is going to solve it. Who knows?
So yeah,
Sam Altman.
quite interesting, and he really seems to be becoming this centerpiece to this whole technology movement, both from the perspective of the advancement of the technology, but also some of the quite robust solutions for the protection from this
Yeah.
technology. And so if I described this WorldCoin project to anybody who's not aware of it, it might sound like science fiction, right? Where you have this orb in Africa and you go to a place and you scan your iris. Like, it sounds like very science fictiony, but it's happening and it's
Yeah.
real. And
Yeah.
and what I like about the structure, though, is that given that it's built on a blockchain, uh, it can exist outside of a singular corporation, right? So even if WorldCoin, the foundation or the corporation, decided to stop supporting the network, everything that's on that blockchain, as long as there is somebody running a node somewhere of that blockchain, that information can live forever. And I'm sure there'd be ways for different companies and different stakeholders to interact with that blockchain information. And so even though we're in a period where blockchains are there's a lot of question about the relevance of blockchain, especially as the focus has shifted to AI and superconductors today. It's actually because of that shift in focus that blockchains have become relevant again, right? Because they become relevant as a solution to some of the problems that AI comes up with. And yeah, so
Has has the WorldCoin company foundation integrated at all with like the current Web3 community, or are they like living on their island, or like what's the talk amongst the groups?
Yeah, they're actually they're backed by some of the biggest. They've been developing this for quite a few years. This is not a new concept. It only launched a couple of weeks ago, but even back in 2019 or 2020, if I remember correctly, we came across this as something the entire community was thinking about. But back then it really sounded like science fiction, and it sounded like a solution looking for a problem,
Yeah,
because in 2019 and 2020, OpenAI and a lot of the attention that has been given to generative AI was nearly not as much as it is today. But I think the timing of the launch is like quite perfect right now, because now you can actually see where it would be applied. But when I first heard about it, it sounded like something that was interesting, but not really necessary today. But
yeah,
now, at the same time, when Elon Musk is trying to get rid of bots from Twitter, we're dealing with this AI fraud. Like at the same time, like this technology is coming out, right? And so, I think because of that, it's like, in my opinion, now to people like far more relevant, and even to people outside of the blockchain ecosystem who have always had interest in like crazy ideas and like interesting ways to solve problems. But I think this is actually going beyond the blockchain core ecosystem and catching the imagination of people who have never really interacted with that ecosystem, but now could be doing it as a way to protect their identity, to prove their humanness, right,
yeah,
and do things like that. So actually, one of the questions I have for you is that humanness question, because that is something from what I've researched is quite a difficult thing to prove, especially when these AIs become more and more advanced. So do you think solutions like this can like help with that, where when you're speaking to somebody, would a solution like this be able to prove that in your application, like your text application, like they'll be able to prove that it's an actual human speaking to you through a system like this. How do
yeah.
you think that relates to WorldCoin or the concept of WorldCoin?
Yeah, yeah, it's kind of interesting because in any tech stack you roll, the two things you're never supposed to do is roll your own authenticate and authorize. Excuse me.
Okay.
So
Okay.
authenticate is who are you, and then
Hmm.
authorize is what you're allowed to have access
Hmm.
to. So I think WorldCoin definitely solves both. Authenticate you with the iris, authorize you through this blockchain. So the ledger of like what you're accessible to, what's your funds in your account, whatever they actually end up putting on the
Hmm.
ledger. I think both have like their ups and downs. I'm not super well connected to know what that looks like. I
Hmm.
do think it's a very hard problem, and there's going to be ways around it near term. Um, but I wouldn't be able to project any further out than that.
Yeah.
Yeah.
Interesting. Yeah, and I know that you've always been, not always, but generally you've been skeptical of the use cases of blockchain, right? Generally speaking, it hasn't been very clear to you to
Commercial
this
use
point.
cases.
Okay. Generally, it has not been clear to you the commercial use cases of blockchain, right? You're still looking for that killer application. Do you think this
Which is actually why
changes?
I'm interested in how you said they were funded. WorldCoin had like
Uh-huh.
backers. What is the business model that they are intending, or is there any indication of like the payback for that?
Yeah, from
Right.
my understanding, it's actually quite similar to the other blockchain networks, where the sort of financial reward comes from network effects. So there's a certain number of world coins out there, but if every person in the world to interact with that network needs a world coin, and you are one of the people that owns a world coin, if 1 billion people come onto the world coin network, and in order to extract their data to show Twitter or Twitter to extract the data to prove that Brendan is real, they have to spend some WorldCoin. That essentially makes WorldCoin a commodity, right? That has a fixed supply, but over time has more and more demand, right? So a lot of these blockchain networks are essentially structured as commodities. So it's as if um, there would be, let's say you're bullish on cars as a future technology. There would be a few ways to financially benefit from that bullishness. You could invest in a car manufacturing company because they would sell more cars. You could invest in a company that extends a company that uh, extracts the fuel that goes into cars out of the ground and puts it into the cars. That as car usage goes up, the fuel becomes more in demand, and you could monetize that. What you could also do is if there was a limited amount of fuel in the world and every car that was sold needed to use that fuel, you could also buy up a lot of that fuel, right? And just hoard
Yeah.
it and like sit on it, right? And as cars became more popular, every car owner needed that fuel to run
Yep.
their cars. So it's kind of like that, where if WorldCoin, the network, becomes a very important part of financial and social infrastructure, every person in the world that wants to interact with that, take a service from that network, has to pay using this fuel, which in this case, the fuel is WorldCoin. So if you're hoarding a lot of that fuel, then your commodity, which is the fuel, could be worth something more in the future. So that's sort of
Interesting.
how a lot of these networks and blockchain networks are built. So I would imagine that it's similar here, where they invested capital in return for some WorldCoin, and now that the network is live, depending on how much usage it gets, the value of that WorldCoin, uh,
Interesting.
from their perspective, might increase.
Do you have any, and you can decline to comment, any thoughts on like the larger funds participating in those like ICOs and then getting out?
Mhm.
Because I've seen more news recently about what ended up happening or allegations of what's happening in those markets as there's downturns, they maybe leave the bag with someone else.
Yeah, and that just it's not really quite different than what would happen in a traditional like equity investment, right? So if you were a fund investing traditional equity in a tough period, if the company is public, like you could dump it on the market and there would be willing buyers on the other side that are buying it at the market price. And you could have and you could have that situation where somebody's left holding the bag, right? So it's really not quite different than that, but similar to those equity types of investments. There's also obviously protections in place. So the same way that if you were a seed stage investor in the equity of a business and it goes public, there's a certain cool off period and there's a certain restricted
Right.
period where you cannot dump your stock. It's similar in these projects as well, where you get locked tokens and it has a vesting schedule. So most of the good companies that care about the long-term success of their business and their network, they do put some of those protections in place so that they only bring on investors who really are very long-term focused. Um, but obviously, after that period has expired, the investors are free to trade and sell their stakes. So
Yeah.
really not quite different than equity offerings, and that's why the statistics are quite clear on this. Investing in the IPOs of tech companies is quite a bad strategy, and you can almost like see the vesting cliff like 6 months
Yep.
after IPO, and you can see what price action does right after
Yeah.
that,
The
right? And
lockout
so
period. Yep.
yeah, the lockout period, and a lot of people have similar lockout periods. So as soon as they go over that cliff, a lot of price action happens. But from the perspective of an investor, that's part of your job. It's part of your job to take some chips off the table. It's part of your job to manage the risk for your investors. And this is actually one of the reasons that a lot of the larger investment firms on the even traditional technology companies are converting into registered investment advisors. And they're doing that so that they can hold on to these liquid assets. Because this is going to get a little technical, but there's a venture capital exemption. And you do not have to register with the SEC as an investment advisor if your entire business is focused on investing in the private equity of venture companies or private equity in general. The exemption basically says that if up to 20% of your assets can be liquid, they can be stocks that trade on a stock exchange. But if you go above that 20%, you fall outside of that exemption. So now you have to register as a registered investment advisor. So a lot of these uh, venture capital funds that held big stakes in Airbnb and Uber when they went public, even if they didn't want to sell the positions, they had to sell the positions if they made more than 20% of their capital. And so, in some cases, they did not want to. They did not want to be forced to sell the positions, so they're actually voluntarily converting themselves into registered investment advisors, which is what we have to be from day one because we deal with liquid assets. They're going outside of the exemption, registering themselves so that if they choose to hold on to their liquid positions, they can. So that's
Interesting.
actually sometimes it's not by
That's
choice that they have to sell their positions.
Does that mean when a fund raises, like when they raise a fund, they can't put that in equities markets while they're finding their deals?
They cannot, not more than 20%,
Wow.
because they would
That
fall
that must
outside of
be
the.
that must be so hard because you
Yeah,
raise your $500 billion, $500 million funds, and you're
yeah,
like we got to deploy it because we're
yeah.
sitting on what is it, money market accounts maybe, but
So what happens in most of these venture and private equity vehicles is that they are drawdown vehicles. So you don't actually call the capital until you find the investment.
got it.
Otherwise, you're right. And this is actually one of the disadvantages of being in a hedge fund vehicle as a hedge fund manager, because the hedge fund vehicles call all the capital upfront. So now there's a cash drag to your performance if you don't deploy the capital, right?
Yeah.
Because if your money is sitting in cash, it's not returning anything. And the
Mhm.
investors start counting their return on the first day of their investment, right?
Yep.
But in the venture capital and private equity vehicles, in the drawdown vehicles, they start counting their returns not on the day they commit to the vehicle, but the day they wire the money. And so the
Interesting.
way that most VC and private equity funds are structured is they'll have a commitment. So they'll take commitments from investors, and then they'll have a drawdown period. So they'll say, okay, we have a 10-year fund, and we're going to draw it all down a maximum of in 3 years. And so during those 3 years, let's say they find one good investment, it needs 5% of the capital. They'll call only 5% of the capital plus expenses and then deploy that. So now the investor's, return clock only starts on 5% of the capital. So when you see the IRR number, like the internal rate of
Right.
return number for a fund, it's not from the date that they um, committed.
Yep.
It's on the date that they put money in. And that's when the date starts and that's when the calculation starts. But because of this drawdown vehicle, um, there's some, investment managers that play kind of loose with the numbers. So what they will do is in order to juice up their returns, when they make an investment, they don't actually call capital. They just borrow money from a line of credit to make the investment, and then they buy themselves another 2 or 3 months, and then they call the capital, and
So they can
that way
shorten the
the
period.
IRR is like on a shorter period of time. So if you give people flexibility, they take full advantage of it. And by the way, I'm not talking about some small, and like I'm talking about large investment
Everyone.
managers.
Yeah.
And there is this whole asset class which is called, which is built around this, where there's people who lend money to funds who have committed lines of investment. So
Right.
let's say
Interesting.
You have $100 million commitment from a pension fund, right? The lender is quite sure that they're going to, pay. So they say, hey, when you get a deal, I'll front you the cash. And then when you call the capital from this pension fund, you can pay me back plus some interest. So it's actually an entire asset class where a lot of people deploy capital because they consider it quite a low risk investment. It's called a capital call line of credit, and people juice their returns using it. Yeah.
Oh, interesting. There is like a similar one. I can't remember the name within startups. If you have like a large enterprise customer, which is like for
Hmm.
sure going to pay,
Yeah.
you can take
Factoring.
out,
Hmm.
yep, line of credits
Factoring
against
and,
them.
and and they'll call
Yeah.
it factoring has a bad connotation, so they'll call it something else. But it's a real challenge, right? When you're dealing with enterprises, there's a real working capital constraint, and the bigger the enterprise, usually the better the terms that they get. And
Yep.
there will be situations where you're not getting paid for 90 days, but your payroll is every 30 days, right?
Yep.
And your AWS bill also comes every 30 days, right? So
Yeah.
there's actually a good real market for these things for small businesses. We're actually working with a company that's trying to solve this problem, not just for tech companies but that have recurring revenue, but also for more traditional businesses that might be selling to a company like Walmart, where they get paid 90 days out, but obviously their expenses are today. So this is an entire asset class, right, with that working capital. But if the fund managers use that capital call line of credit, they can increase the fees that they earn. They can make their funds look better. They can also get better deals with the companies because they're able to very quickly deploy the capital instead of waiting for
Right.
the capital call to be finished. So there's quite a
On
few reasons that this service exists.
It feels like almost in that scenario, when you have a capital call structure with your investors,
Mhm.
wouldn't they then have to have it in a liquid account and then they're holding the bag in some fashion
Yeah,
because they don't have the ability to make
yeah.
broadband investments during that period?
Yeah, and they have to manage the liquidity, and it becomes quite challenging. So you could be a pension fund with $1 billion in commitments, and they can all be called over the next 2 years. So you need to
Mm.
be holding $1 billion in fairly liquid things, and you hope that you're not putting in an asset that like goes down in value, right?
Yeah, yeah.
Because you can't pay them in US treasuries, you got to pay them in cash. So there's entire like teams within large institutions that project out their capital commitments and then are managing the capital commitments in a way that they can't be in a cash crunch when a lot of investment firms start calling the capital. So yeah, it's a challenging thing, but I'll tell you a few good things about this structure. We've gone deep enough into this topic that I can now go really deep. But some of the good things about this structure is when you don't have that cash drag on the investment, it helps you be more patient with the capital, right?
Yep.
Because you're not worried about that IRR, calculation, and so you're really able to go in and really like think more deeply about each investment, do more due diligence on each investment. But when you have $100 million sitting in a bank account, of course, there's a urgency to the deployment. And another good thing about it is that if you're in a tough environment like you are right now, you don't have to deploy any capital. Like you can just completely sit on the sidelines for 6 months, 12 months. And that's why a lot of the startups are finding it difficult to raise capital, is because it's not like there's money sitting in the VC's pocket burning a hole in there, right? It's not in their pocket at all right now. So they're able to take a breather for 6 months, kind of take it nice and slow, and then
Summer vacation.
yeah, take the summer off like they all do. So there's some good things about it. Obviously, there's some good things about it from the fund manager's perspective. There's some good things about it from the investor's perspective, but there's quite a few things that, if misused, can really hurt the investors. It's very rare for these structures to hurt the investment managers, but there are some investment managers that will misuse these things and to the detriment of their partners.
Yeah. I'm
Yeah,
a big fan of like know your incentives. You'll know the person, and this
that's
is like
right.
a great example of there's a
Absolutely.
good way and a bad way to interpret it. As long as you
Yeah,
understand the incentives, it's gonna
exactly.
net help you
Exactly.
out.
Well,
Super interesting.
perfect. Well, I'd love to jump to the next topic. Brendan,
Yeah.
if you could give us some introduction on what you're thinking about defense technology and how it relates to the world of venture capital, government, and everything in between.
Yeah. So just a bit of background on myself. I spent a number of years selling to the defense sector, both foreign and domestic. Held top secret clearance for a period of time while living in Washington D.C. and saw the entire stretch of what it's like selling technology, particularly new age technology, into a behemoth of a customer the size of literal countries in many ways, looking at the defense spending that the government does. Um, what the topic for today, I think, is going to be touching on more specifically, though, is the hype and or relevance that we now have within the defense sector. One, because of an upcoming election. It's
Mhm.
always a big topic of debate on how much we're spending. And then two, there's a number of companies as well as investment firms, particularly VCs, that are making mandates or more public claims to uh, pursuing this as an actual industry, which is pretty surprising given the last few years we've waned away from this, given the typical maybe San Francisco stereotype of we don't work with defense or military applications.
Mhm.
So, first question for you, Hamiz, is would you, as an investor, invest in the space? Why or why not?
Yeah, an interesting question that, I think about. I actually was thinking about, obviously, in the context of the podcast, but I also had a conversation with a friend of mine whose investment firm specializes in heavily regulated industries. That's actually their investment criteria. They don't invest in
Interesting.
companies that are not touching some super heavily regulated industry. And it's because of the background of the general partners, which is their ability to first get a sense of how this might play out in the regulatory environment, but to actually affect the regulatory environment. Like they have the networks and the reputation and, um, and the influence to be able to actually affect the change and affect the outcome of what might happen. And so there's definitely some very interesting um, investors out there who understand this world obviously much better than me. So if it was an investment that was in a very heavily regulated industry, um, typically in the past, like we have shied away from it because that regulatory risk is something that can be that really is in a lot of cases a binary outcome, right? Like you can either be spot on or regardless of the network effects and the growth and like everything, and you can be just spot wrong because there is a regulatory reason for that company to no longer exist. And so it's a very risky proposition from that perspective because a lot of the factors that go into that decision are outside of the control of the entrepreneur, right? And
Yep.
so if the entrepreneur's not really in control of that, those outside forces, obviously it makes the investors quite uncomfortable. But if I had to make an investment like that, we obviously, first of all, we operate in a very regulatory intensive industry, which is investments. We have tons of compliance and tons of legal and training and stuff like that that we need to go through. So it does come naturally to us. And we also have worked in industries that might not be as dependent on regulations, but are quite close to regulations and quite dependent on regulations like healthcare, financial services. the way that blockchains interact with financial services, make blockchain investments a very heavily regulated industry. How blockchains interact with healthcare also in a similar way, um, make the outcomes of those business dependent on regulations. But if I went into a business that truly was something that sold into government or sold into this industry, this defense industry as a whole, I would have to lean on other firms and other investors who do this every day a day in and day out, and like really understand the intricacies of those what happens in those rooms and how those decisions are made. But on my own, I don't have the depth, especially when it comes to defense technology, to feel comfortable making those investments.
Yeah, yeah. I find it interesting. The more we kind of spend time on this, there's they call it the valley of death issue, where companies that have the opportunity to demo, get a small SIBR investment, which is the small business innovation program, something like this, SBIR,
Hmm.
where you're actually able to kind of get in with a program office from the period in which you're maybe on contract for these small check sizes to the time you're a system of record can
Hmm.
be so many years, and that's the value of death, which most companies die. So the typical path over the last 20, 25 years has been dual use commercial technology first, where you show some value within the commercial sector that pays the bills. There's high churn typically within the commercial sector
Hmm.
relative to the government side. So then once you've kind of found your piggy bank in the commercial sector, you can go to the government side, sell to the public sector in order to A, get longer term contracts, and then B, and many times get actually higher contract values. But again, that's a very long, arduous process, and you've got to be willing to stick around for that. The
Absolutely.
last two companies that actually did it backwards. So Palantir started public sector and then went commercial, and then
Mm.
vice versa. Scale AI was commercial first and then entered the defense sector later. So two different approaches. They both work in some ways. They have those advantages and disadvantages, though.
Yeah,
And you're
absolutely.
pulling
So
up the
yeah, let's put it in context of geopolitics, right? Like how does uh, spending on defense technology play into the world of politics and wars and conflicts all around the world? So help us understand like how how you think about this, how important you think this arms race is on the global scale.
Yeah, I think one thing to note though is even when we say that a lot of companies aren't immediately tagged as what we'll call primes on majority of these contract vehicles, which are all public by the way,
Okay.
unless they're in like certain security clearance programs. You can
Okay.
publicly see who was the prime on the majority of these contracts. Majority of people that enter the public sector government contracting space will become a subcontractor on a number of these vehicles. So Microsoft is a great example of, hey, you're going to be buying some large piece of work, and then they're going to sub out some of the services on that work to a number of startups or smaller individuals, small businesses in many cases. What we're looking at here, though, is an interesting approach. I don't know how to fully interpret this one, but this is NATO, who launched their 1 billion euro VC fund. Very surprised to see this. For context, when you're a NATO allied country, you have to operate on what's called their platform. So the bullets you use, the tanks, the a lot of the actual like physical systems, physical as well as software systems, have to operate in a way that they'll interoperate across country lines for anyone in the allied pack. What that means is them as a organization have to procure in that same fashion and many times. So that way, when you're saying, hey, we want to buy an Android system, it's going to work in Ukraine, and the operators of that Android system could be from the UK, for example. Uh, that's like one specific example of why you would actually need to fund this from the NATO lens relative to a particular country.
How do you interpret the US and Canada not participating? And it basically meaning that they cannot fund companies in either of those countries.
Um, I'm not sure. Yeah,
Yeah.
I wouldn't be fully spud up with that.
Hmm.
Realistically, I haven't seen a ton of like defense investment outside the U.S. that I think is real.
Hmm.
It's just that we have enough spending here where we're covering most of the bases, and the platforms that get developed are coming out of the U.S. Um, defense system relative to NATO deciding, hey, we're going to kick off a new platform. Let's get everyone on it. Uh,
Hmm.
we'll see though. We'll
Yeah.
see.
So what do you think about autonomous weapon systems? Like, are these some is you can talk about it from a technology perspective, talk about it from a philosophical perspective. What does it mean to have an autonomous weapon system that can decide what to attack, how to attack it, what amount of collateral damage is acceptable, what type is unacceptable? Like, how do you think about it from a technology perspective and then maybe a philosophical perspective?
Yeah. So the I think the reference point here is like command and control systems. Today, most of them we call non-kinetic in nature. So they're surveying, they're drones that collect data, provide defense mechanisms. They're moving to become more kinetic based with human in the loop control. So we'll have typically someone, I think in Las Vegas is where a lot of them are stationed. Someone's physically like controlling them on a joystick, and there's a ped somewhere around the world where they're actually operating these. Andrew and a few others are um, pulling a pretty interesting play around what they'll call their lattice system, which is
Hmm.
like their AI fabric that's supposed to be interoperable. So in the same way that you can have AI agents that operate kind of in their own world, these actually operate together. So if you think of like the swarm architectures and two AIs kind of like without having someone actually control them, but they're actually operating between the two of them to execute a mission. Super interesting space. I think we're actually finding we've had that all along. It was called a Roomba. We just didn't put any kinetic craziness on it besides a little spinning thing. It's not too far off from that though. Uh,
Yeah.
yeah, and then I think manufacturing's also seen this over a number of years. Different command and control systems
Yeah.
that are going to be relevant.
Yeah, and like
Yeah.
the other thing that I was thinking about when I was so when we started thinking about these two topics together, one of the thoughts that came to mind is I don't actually know how the weapon systems work when you are ready to launch a nuclear attack on another country, but from the movies that I've seen and the research that I've done on those, there's like this whole procedure where there's actual physical people who have physical keys who need to who need to um, authenticate certain codes, and once those codes are authenticated, like they have to launch the nukes. Um, but there were two things that came to mind. One thing that came to mind was how do we ensure that those communication channels are protected, and how do we ensure that the authentication by voice or video for the people giving those commands can actually be trusted moving forward,
Yeah.
because it's quite simple to actually replicate the voice of the president, right? Like that's quite simple now. And the second thing was that there was actually research done which said that uh, when these operators were put into tests, there was actually not a perfect execution score. Many a times when it actually came, when they thought they were about to blow up an entire city with a press of a button, people didn't actually go through with it at 100%, right? Which is what their entire job is, to make sure that once they're given that order, there's no second guessing where it came from, how it came, what the reasoning is. Their job is to press the button, and they found that humans were quite reluctant to press that button. So, do you think? So, two questions. One, how do we ensure the security of that communication and that process? And two, would it be something that AI can actually replace or a computer can actually replace, where you do get that 100% execution when the decision is made?
It's never 100%, first of all.
Yeah.
I like human machine teaming systems, and that in the military has adopted that term and they coined it. I think that's how it should be. I think there's really is something about the ethical and moral quandary that a person will make, and our judicial system is also built for it. I think in many ways because we don't have a way to blame an AI in the same way that we can move up the food chain of a military unit. It's going to be hard to adopt it otherwise. The doctrine actually is very impressive from the defense sector for anyone who's been in it. It is nothing like a startup or anyone who's worked at like a job, and even in finance, and you're like, oh man, we have all this paperwork and compliance, and there's all these procedures. It's nothing in pills to that space. So I think that that's actually very important. And there's a lot of interesting work around LLMs because they're really good at reading and then taking this doctrine and then what can you do with it. I think that'll be an interesting space in the future. Scale AI, I think, is one of those companies that is deploying technology. They have a platform called Donovan. They've rebranded their LLM platform for that use case. The last comment I'll make is actually a fun little anecdote because I think the nuclear comments are very timely because of Oppenheimer and the movie coming out. But the one that I would say is probably way more realistic and actually equally as scary is right now we have missiles that launch every few weeks from the US. It's called a SpaceX rocket, and that's autonomous, right? And we call them rockets, but at the end of the day, all rocket technology came out of missile technology, I think in the 80s. Obviously, out of the space age, they just repurposed this, and majority of that is what we see on most of the rockets today. And, when I was down, I worked at SpaceX for about 6 months down in Florida. We launched and landed 5 rockets. We launched 5, about 3 of them landed, 2 of them fell over. So the team that I was a part of was instrumentation and range ops. So what that means is the connectivity between the ground system, which was an umbilical cord when it's plugged in. If you've ever seen like a launch, that like cord that kind of flies off, we were in charge of basically connecting up to the rocket. And then as it's taking off, there's a different band, wireless band that we operate on, which is effectively like a military grade wireless band in which we're communicating to and from the rocket as it takes off, basically passing back telemetry information, but it is, broadly speaking, autonomous. But to my point, taking the rocket and shooting it off has never been a problem. What the difficulty is bringing it back down to Earth. If you mess that up, you effectively shot a near missile back down to the United States from a private company that operates very quickly. So that's a wild concept that we were even able to do that, which is why you had to launch it into the water, not back onto land until much later in their tenure as a company. Which was
So
kind of
to wrap this topic up, you know, as a founder, do you think that venture capital should be involved in the defense sector? Do you think venture capitalists can make a justifiable return by being involved in this sector, or do you think we have to leave this to public funding? And do you think it messes up the incentives, messes up sort of the balance if the purpose of the defense sector is to maximize profits?
I think it actually adds a nice diversification of the VC portfolio. If you think of it's the opposite of the earlier topic, where in an ICO, like the initial coin offering in like a blockchain company, where you have almost immediate liquidity from like that asset. The next layer up is like a traditional startup, which you can like almost force the founder to kind of get out early. The next kind of like graduation of that is working in the defense sector. It's very hard for you to force a finger on that type of contract vehicle. You're basically signing up for a longer term commitment, and I think you're diversifying the payback period in the type of companies that would be able to survive in that setup. And also, obviously, under recessionary periods, would they do better or worse? I think that's like a very interesting topic to explore. I don't know the numbers on it, but I would probably because I'm biased and in the space. But I think it's interesting enough to let most companies that are looking to expand markets, instead of expanding to global markets, maybe expand public sector and private sector. Yeah.
Interesting. So you would say from your time at, Palantir and Scale AI, overall them being, starting on the commercial sector and then going into the government sector, like overall that was the right decision for them to make?
That's such a hard question. The counterfactual world, I'm not even going to pretend like I'd be able to make the case because they both did it the opposite. Palantir was CIA agency first, and then they went
Then,
commercial sector. Took them 20 years to do that, 15 roughly, and then it's brought 21, 22 years now. Scale AI did it in 7. Does that make them better or worse? Was it because of market conditions? They rode a pretty massive data labeling wave for autonomous vehicles. That dried up, and now they're focused on the defense sector is really their quote unquote bread and butter. But we'll see, and history will tell. Yeah.
interesting. Very good. Well, I think we can wrap it up. We're right about an hour on these topics. Great discussion, tons for me to learn from it, and we'll be bringing you even more interesting stuff. We're also planning on bringing on some very interesting guests to add to the discussion on particular topics, and then also we're adding more timely topics in terms of interesting news that has come up, and making sure that the hosts and the guests are providing their opinions, their thoughts, their insights on things that are top of mind for people today. So thank you guys so much for joining us, and we'll see you in 2 weeks.